Hey everyone, Jordan Dunsmore with YTS with another edition of Off the Charts. So this week we want to talk about gold. Is gold something you should keep in a safe at home? Is it something you should keep around your neck, maybe on your fingers? Or is it something that you want to add into your portfolio? Let's go to the charts to find out. So for the charts this week, we actually are going to reference about 4 different charts because gold is such a different animal. We wanted to show you what it correlates to, what types of markets it does best in, and then maybe what markets you want to avoid buying gold. First off, we just wanted to see over time, over the last 45 years, has gold outperformed the S&P or bonds? The answer is no. You're way better off just being in the S&P 500 or just being in bonds. But on the next slide here, we wanted to see and kind of cherry pick some data and say, what about the last 25 years, or say, since the market peaked in the early 2000s, how did gold perform against the S&P 500? Surprisingly, the last 25 years, gold did outperform the S&P 500. But the interesting thing that we saw with gold is there's really no time period that gold was less volatile than the S&P 500. So again, gold has outperformed the market over the last 25 years, averaging about 9.5%. But what really surprised us when we really dug into the data is that pretty much every time period over the last 50 years, gold has been more volatile than the S&P 500. So if you're thinking of holding it in your portfolio just as some steady 3 or 4% growth play, that's not the case. Gold is more volatile than the S&P 500. So another area we wanted to look at was how does gold perform in recessionary periods? And overall, it's actually really strong. Outside of 1980 and 1987, gold has been a safe haven during recessions. It's just a matter of trying to time that when the recession's going to hit. So this final chart here is where we really started connecting the dots. It's gold versus the US dollar. And anytime you see the US dollar, the valuation start to drop, that's generally when gold starts to really increase or go on a long run. And majority of that has to do with gold is priced in US dollars. So anytime the price of the dollar goes down, you can buy more gold. So specifically based on the last couple years run, we're thinking that we will see the dollar weaken just a little bit and gold maybe go up past 3,000, past 3,500, and then settle off again. But our main takeaway from this is gold is not something we want in our portfolios because it's really unpredictable, it's really volatile, it's something you want to keep in your safe or keep around your neck. So thank you for tuning into this week's edition of Off the Charts. We'll see you next week.